Hey, Dustin Tibbetts with Passport to Wall Street. And there's a saying, too far, too fast, and that's used a lot in the markets. The question is, do stocks move too far higher or lower too fast? And I'll give you a great example, really. It's the S&P 500 right now, or the Dow. The markets really were in a nice controlled uptrend. Everything was great. And then we got to the beginning of the year, we get the tax reform, and look how fast this started to take off. Well, if you go back on any chart in history and you see where it's moved too far fast, or too far forward too fast, or fallen too far too fast, typically they tend to revert back to the average prices. Now, how do we calculate that? How do we know where a particular product may move back to? Well, the most popular way is to use the 20 period moving average, and that's my green line that you see on the charts here. Anytime a stock moves too far and too fast away from that moving average, it tends to come back, sometimes even a little bit further. Well, that can happen on the downside too, and I'll give you an example here. UPS, a very, very good example of how it can go too far higher too fast and also fall too fast. We look at this chart here, going back all the way through. Look, when the stock moves around the 20 period moving average, everything's fine. Everything's fine. And when it moves too far away, see how far it's pulled away there? All of a sudden, people find value. They find that this is maybe a good deal. Get a little excited and push it too far. What happens? It comes right back down to that moving average. Well, just recently, UPS was on a tear right into the Christmas holiday. Everybody was excited about UPS. They even charged more for the Christmas time sort of delivering of packages, a flat fee, and that sent the stock price way too far, way too fast, and of course too far from that 20 moving average. Well, what happened? It already made its way back, but as investors saw it make its way back, they chose to head for the hills. This also coincided with earnings. They just released earnings. Quite a bit of a disappointment there. What has happened now? Now the stock has moved too far, too fast to the downside. And so now what traders think is, hey, that's a severe discount in the short term. You'll likely see the price start to move its way back all the way towards the 20 moving average. Now, we've wrote a bunch of articles on this in the past, but it's hard to explain in an article that this moving average will move each day. It will play catch up to the price of the stock. So it's not that I'm not making the assumption it will go back to $130. I'm saying that there will be a bounce in the stock. The moving average will creep its way down as well, and that will be your target in the short term if you're looking for a long position. Now, be sure to check out our article that we talked about an actual options position you could put on using a short put spread to sort of take advantage of this short-term extension to the downside. Again, when stocks move too far, too fast, they tend to revert back to their 20-day average. Thanks for watching. We'll see you soon.